Good morning, welcome to IG's early morning call. It's Thursday, the 5th of October. Let's take a look at the headlines as we begin with what's going on across the markets as we see yields pull back a little bit, indices rising for the first time this week, the VIX index falling back as well from 4-month highs. Meanwhile, we continue to monitor what's happening in the currency markets, much of which have been driving the recent moves in the markets broadly, and the dollar pulling back after that weak ADP report yesterday. We've got some interesting moves in the markets now ahead of non-farm payrolls on Friday, and this is giving some much needed relief to the Japanese yen. And on the commodity prices, we've got oil markets losing as much as $6. EIA data yesterday showing weak demand across the board, but gasoline in particular where we have seen some moves which supports that slightly lower price on oil, although we've got OPEC still maintaining their restrictive supply strategy. Let's take a look at what's happening in volatility. As I said, it's down now for a second day, although it's not actually moving very much today. We are at the bottom of yesterday's candle, below the 200-day moving average, on from those 4-month highs that we saw on Wednesday, those levels not seen since the back end of May. And this means we've got a little bit of money going into the equity markets. I say a little bit, you've only got to look at the moves that we've seen in the last couple of weeks or so. This has been quite a market loss. And if you've been the right side of the trade, obviously this is giving you accelerated returns with short. But in fact, in today's session, we are up. I want to show you the 30-minute candle chart. Let me just quickly poach that line there to take us back to where we were as at the close last night in the markets, and you can see that we are slightly better off. So we are expecting a gain at the start of today's trade as we await the beginning of the session at the top of the hour. But I think in the grand scheme of things, today's move is only a tiny retracement on from the big declines that we've seen recently. No evidence for me to suggest that the central banks are going to be any more lenient, bearing in mind what we've seen, despite the fact we saw slightly softer and more benign ADP data out yesterday. Let's take a look at the German and French markets as well, as we always do. Yesterday's market, 24-hour market, saw gains. In fact, the DAX was one of the few markets that was up in yesterday's session. It was up just 1/10% on the trading day yesterday. 24-hour market showing a better response going into the back end of yesterday's trading day on the 24-hour markets, boosted by the late surge on Wall Street, relatively speaking. Although at the moment we've got 15,129. We are expected to open slightly higher in the German markets, but that 24-hour market's now showing a little bit of a red candle. French markets, quite a volatile day yesterday, and indeed at one point in yesterday's session we were trading there at levels on the French markets not seen since the 24th of March. Then came the pullback, 24-hour markets up, and we got a green candle, although it's a very slender candle in the session in today's trade, but we are looking for a slightly stronger start on from the cash session yesterday. Overnight in the Asia Pacific markets, it's not been so bad really when you consider what's been going on. But like I said, with the European markets, these gains, even that 1.6% gain, is only a small retracement on some of the losses that we've seen recently. Hang Seng Stock Index down, up. S&P ASX also up by a margin of 0.5%. Wall Street closed yesterday, saw, as I say, some late rally trades on the markets. Let's take a quick look at what we've got in terms of the closing markets. The Nasdaq stealing the limelight with a rise of almost 1.5%. But in fact, what happened in the session in yesterday's trade was we went on to continue to rise on the 24-hour markets. And one look at the 24-hour markets on the IG platform, you can see clearly we didn't end too far away from the top of yesterday's candle on the Nasdaq. But we do have a little bit of money being taken off the table at the moment. But this market is being supported broadly by this line of the establishing line we had back on the 18th of August. This line I've still got on this chart here at 14,550. So that, for me, remains the area of support. Any candle closed below there. And then there's not much supporting this market all the way down to a low point there at 13,500. And that low point there at 12,720. So not much giving it support if you get a candle closed below those recent lows that we've seen on the Nasdaq. But as I said, it's really all about what happened yesterday on the bond markets, with the yields falling slightly, indicating that perhaps possibly maybe the expectations for upside interest rates might have been overdone. But these markets swing, it's like a pendulum. They swing from one emotion to another. And that's what we had yesterday. We had a fairly benign ADP number, giving us some little bit of a relief rally in the equity markets and the bond markets as well, sending yields down a touch. So that's a response we had yesterday from that slightly weaker than expected number coming through from ADP. And this tees us up nicely for tomorrow's non-farm payroll. So I'll take a look in some more detail at that in just a few moments' time. What I want to do, though, is to take a look at what's been happening in Australia, because we've seen some surprisingly strong data coming through from Australia. And the interesting thing is here, it involves China. It's the trade number. It came through with a better than expected 9.64 billion Aussie dollar number in August, above market forecast of 8.72 billion, after a downwardly revised 7.3 billion surplus in the previous month. Now, shipments increased by 4% from the previous month, the first increase in 3 months, boosted by a rise in exports to China. Meanwhile, imports were down 0.4%. want to show you this chart here, which is the Australian dollar against the US dollar. Now, bearing in mind, we've seen the US dollar fall in the last couple of days, which I'll show you in just a moment's time. This goes, I think, some way to show you why and other currencies benefits from that weaker dollar. And for a second day in a row, we've got the Aussie up on the trading day today. I think some of this is undoubtedly because of the Australian trade data, but broadly speaking, it is because of that weaker US dollar, which I'll show you now, because I want to show you some more details about more of what's going on around the currency markets outside of just the dollar. This is the dollar basket, down for a second day in a row. We are still within this channel, and I think so long as this rising line of support is sustained, we're currently trading at 106.34. The rising line of support kicks in at the moment here at 105.6. So we've got a whole point in the bag below where we are before we even start to think about support. So there is the potential possibly maybe for a little bit more downside today, depending very much on what happens with economic data. Talking about data, in Germany, we got trade numbers out just a short while ago, unexpectedly rising in August to 16.6 billion euros from 15.9 billion in the previous month. Imports falling 0.4%, exports down 1.2%. We had been expecting exports to fall 0.4%. Quick look at what we got in terms of the euro-dollar trade. And again, this is really a function of that weaker US dollar as much as anything else. Euro up for a second day in a row. And this is ahead of the data out later on today for the US weekly jobs numbers. Let's just get a quick update on where we are in terms of the US jobs figures, because I want to wind the clock back to take a look into more detail about this ADP number yesterday. Rising by 89,000 in September after 180,000 in the previous month. We've been looking for anything around about the sort of 153,000 level yesterday. So you can see it was a lot weaker than had been expected. Most of the job creation is happening in the services sector, leisure, hospitality, financial services, and education and health services, all adding jobs, while losses were seen in professional and business services, trade areas, transportation, utilities, and also in manufacturing. So let's take a look at what's happening today. Weekly jobless numbers forecast 210,000. The previous week, 204,000. The 4-week average expected at just over 209,000. And that is the number for the weekly jobless numbers. And that could give it a little bit of a twist to the dollar when that data is out. Now, let's take a look at what's happening in some of the corporate news headlines. Just one company that we were looking for in terms of numbers out today, and that was Imperial Brands. I'll take a look at the share price chart in just a minute, which was twisted yesterday because of the Sunak statement yesterday on smoking. The company says it's on track to deliver full year guidance. It has announced a £1.1 billion share buyback program. This is up 10% on last year's £1 billion buyback program, which we'd seen initiated. Total capital returns in fiscal 2024, including ordinary dividends and share buybacks, expected now to exceed 2.4 billion. The company says it's got strong tobacco pricing and momentum is building behind the next generation product, NGP, with revenue growth across all categories. This, of course, is vaping amongst other areas. But look at what happened yesterday in Imperial Tobacco shares, down a whopping 2.89%. And we were off the lows, actually, at the close yesterday. All this coming through with the nanny state extending itself once again. Rishi Sunak suggesting or looking at ways of trying to force people not to smoke. And one illustration was given yesterday, and that is if you start to bring in you're not allowing some people to buy cigarettes, you get this ridiculous situation which will develop in about 20 years' time when you get adults coming through who are now in this category where the government doesn't want to allow them to buy cigarettes at all during their lifetime. You'll end up with a situation where potentially you get 20, 22-year-olds standing outside a shop, sending a 24-year-old in to go and get their cigarettes. But that is the ridiculous situation that could well develop if the government gets its way and restricts the tobacco sales. I'm not saying tobacco is good, and indeed it causes all sorts of physical harm, but the nanny state once again making itself felt. And this is why we saw this drop back in Imperial Tobacco shares down yesterday, down to levels not seen since the 17th of March 2022, a big drop. I quite like the look and the shape and the feel of the trading statement out this morning. So it'll be interesting to see if we get a buyback or rather a return to some sort of upside performance in shares. The stock will start at 15.77 if you are long on this. It's not my positioning because I don't have a position on this, but and it's not a trade recommendation, but your stop should go very close to the underside at the bottom of the wick of yesterday's candle. So around about the 1550 level, 1577 is where the stock will open at the top of the hour. Now, we got some interesting reports a little bit later on today in the States worth looking at. One stock before the open, one stock after the open. Constellation Brands is the first one, which has a number of very well-known brewery brands under its umbrella. Scheduled to post second quarter earnings before the US opening bell. Earnings forecast at $3.36 per share. Revenues at $2.8 billion, both about 6% up on the same quarter this time last year. Now, Constellation Brands is not an all-session stock, but the stock is worth watching when we get this underway a little bit later on the US markets. It will open at $249.26, and we'll be covering this earnings and what it could mean for the share price when we get our show underway at 1:30 today, UK time, an hour before Wall Street gets underway. We'll be covering this as a stock to watch. Levi Strauss is the other one, poised to announce its fiscal third quarter earnings after the market closes this evening. The street expects earnings of 27 cents per share. That would be 13 cents lower than the same quarter this time last year. Revenues expected to reach 1.54 billion, broadly unchanged on last year's numbers. The stock is not all sessions on the IG platform. You just quickly dial in the share price chart so that we can look to see just where we are, because the company has been finding the going tough. Let me see if I can get some details here for your viewing. Much of what we got on the downside has been because of the increase in costs for its raw materials, such as cotton. The stock rose yesterday by a margin of 1.8% at 13.43. So the stock up yesterday. This is not an all-session stock on the IG platform, but this company will report earnings after the bell this evening. Now, in amongst some of the other companies worth watching today, Exxon Mobile yesterday coming out with an interesting statistic. It intends to deliver third quarter operating profit of between $8.3 and $11.4 billion. Now, this is below the figure that we saw last year, but up from the second quarter. And it was overall a good number to consider. Exxon Mobile is an all-session stock, and recently we've seen this stock top out at record highs. Let's take a look at the share price chart, just so we can illustrate what's going on here. The record high was at $120.69, but we've seen this pullback recently because of, well, in the last day, it was because of the drop in oil, and I think this is really occupying the minds of those that were trading the stock. So not much uplift, or indeed perhaps maybe nothing, seen from Exxon Mobil reporting what it sees to be good earnings coming through. It says the full results are due to be released on the 27th of October. But this drop yesterday was really all about what we saw in the price of oil. Let me just quickly bring you the price of oil to your attention, because this drop that we saw yesterday was for a number of reasons. Crude oil stockpiles yesterday falling, and also we've got yesterday OPEC deciding to maintain existing supply cuts in place. 1 million barrels of oil cut for Saudi Arabia and 300,000 barrels of oil cut for Russia until the end of the year. Yesterday we also got this data out, the EIA oil inventory data. Crude oil stockpiles falling by 2.2 million barrels. Now, this would normally see an uplift in the price of oil, but clearly oil is down as a result of a number of different factors, not least of which are concerns about the outlook for demand. And that was really behind much of the sell-off we saw yesterday. But it is just a question, at the moment at least, still of going with this market, which has been seeing recent gains. Let's move on. Take a look at gold. They're stalling at the recent lows for gold, 1823. We've recently seen gold hit levels not seen since the 9th of March, and we're not too far away from that figure. And base metals, copper, we've been following this. We continue to trade below the 8,000 level at 79.26. That's it from me. Do watch out for Imperial Brands at the start of today's trade, and also see if we can get any recovery in that number we got out late yesterday for trade on the figures coming through for Exxon Mobile. Trades or sessions on the IG platform. The first trade on the IG platform this morning at 9 o'clock. So it's Imperial Brands and Exxon Mobil, two stocks to watch at the start of today's session.